Portfolio Builder members, welcome to our Friday trade alert. And lo and behold, it looks like we may have some sort of trade deal. There's a high-level talk going on with their top official and Trump starting in a couple hours, and it should end after the market closes. So everyone has their fingers crossed if you're long equities. And so let's just take a look at the last trade alert we gave out and how this has shaped up for us. So Wednesday, I told you guys I was very skeptical of a trade deal, but we still put on a bullish trade, and that's because our strategy doesn't rely on predicting the future. We have an equal weight in stocks and bonds. When one goes down, the other goes up. In general, they're both headed up when you look at the macro picture. So we went long the SPY skeptically and hit our maximum profit. Let's take a look at the trade. For every 100 shares of the SPY ETF, you sold the 295 call, and that's when it was trading at 291.20. Now it's crazy. To get a $10 move in 48 hours nearly on the SPY is unheard of. So the people who did buy that out of the money call option scored very well today, but we still made out like a bandit. Meanwhile, we played it safe. We invested $1.19 in that 289 put, so if things did go sour, which they were looking like they would, we had 16 companies blacklisted this week, visas being pulled, lots of pressure being applied by the U.S. to China. So we'll see. Are they going to really give us a deal? That would be a breakthrough for stocks, and my prediction I've been giving you on the SPY for that 315 target could be in place. We got to watch the news this weekend, and I'll let you know the outcome on Monday. But regardless, we gave up profits above 295. We collected 52 cents to do that, and we invested that to buy downside protection in times of uncertainty. So I wouldn't have changed our trade, and it did make a nice profit. So let's take a look. To close out today's trade, you had to buy to close that 295 call for $365. So that guy who put 50 cents in got $365 out. Good for him. Rarely happens. We got 4 cents out of our long put. That's our insurance. No big deal. Cost us $360 to get out of the trade. So net profit, we saw the SPY go up 771. We lost 428 on the protection and netted a profit of $342 or $5,831. Now I'll point out our return in October went from 1.1% because the TLT screamed higher with all the trade tensions. TLT dumped off in the last several days, wiped out our profit despite the SPY creating a rather large gain today. Nothing to worry about, guys. TLT is going to head much higher because of what's happening globally with the central banks, their interest rates, and now we have the Fed coming in and purchasing up massive treasuries. So that announcement's all coming out in the next few weeks, and our strategy will continue to be very, very strong in terms of having very little drawdown and being able to consistently make our target of 1% a month. So today's trade, and by the way, we did find out a way to protect the content from non-buyers, so we will be able to cover the content live of the current trade alert moving forward. So for those of you guys who are paid, don't worry, we're not giving away the trade content. We have a way to make it private for folks who have paid, and then we're going to release this video after the bell each day for our expired group. This will give you more time to go over the current trade alert and make sure everyone is on top of it. Good morning, Tom. Thanks for joining us live. So today's trade is to sell the 302 call. That's the furthest out of the money that's worth selling because we only get 25 cents. And I'm still a little skeptical, so I'm still buying a rather expensive put for 69 cents. We still don't have the trade deal in our hand yet to completely feel safe about taking even more risk on the SPY. Here's our risk profile today. We stand to lose up to 381 and stand to make up to 319 per block of 100 shares of the SPY, and this is going to cover us through the weekend. Now, if the trade deal does break down, we have a huge position, 40% of our portfolio in the TLT. So I do suspect TLT and gold as well as silver will continue to pay off very well for us. But right now, the SPY ETF is finally having its time to shine. So after lagging on the SPY for months, I do suspect we'll be able to have a very nice series of trades on that Monday, Wednesday, Friday SPY trade alert. So if we do look at the breakdown of returns per portfolio, we get a feel for kind of the ebb and flow of each portfolio and how they tie in together. So far we are down 0.1% in October. That's after being up 1.1% earlier this week. And that is, again, because of this huge sell-off in the TLT. Let me pull that up. You can see that massive drop. Our put options are generating some profit. So we've lost less than everyone else in the TLT. But this is not going to crash because the Fed is coming in. They're massively buying up these bonds. And like I said, bailing out the banks. They loaded up on these things. They have no way to get out without spiking yields and dropping the bond yield. And we're really not out of the woods here with the trade deal yet. So we'll see what exactly the language is of this trade deal, what each side is giving. And I still am very bullish on the TLT. I think these rates can go significantly lower as all these banks are lowering interest rates and printing massive amounts of money. So that's what we have coming up from the Fed and pretty much every major central bank in the world. So no worries on the TLT from our standpoint. We have the put below, but that did take out some of our profits. On the SPY, as I've been saying, with any kind of interim trade deal, I suspect the SPY can go to around the 315 range. And we'll see. We'll see what we get this evening. And if it's bullish enough, we'll be playing this to the upside to that 310 to 315 range, in which case we'll get much more tight with our option caller and even start to get worried about any kind of downside risks after that. So everything's playing out as we predicted for the SPY. If we got a trade deal. What confused me was China came in and started buying all these farming goods, and then the reciprocation from the U.S. was to start banning different companies, creating blocks on visas, all kinds of nasty things that would upset the Chinese. Plus we had the NBA scandal going on, and we still have protests in Hong Kong. So I don't think we're quite out of the woods, but I do think we have a period of peace in the trade war at this point. So we'll have to digest all the information that comes out of this potential trade deal over the weekend and go from there. Meanwhile, the big reason we want to be long precious metals is not necessarily because of trade tensions. That is a big part of it. But the real story is that the central banks are lowering rates and dramatically increasing the money supply because China is slowing down dramatically. And the only way to stop their country from crashing is going to be a huge credit impulse. So I suspect that this will cause most central banks around the world to follow suit and make the general value of gold rise. So we're still long gold, no change in that. And I think with the announcements coming out from the Fed about massive QE, although they're saying not to call it QE, then we have a long ride ahead on GDX. And the same story is true for SLV. So no changes currently to the portfolio. The only switch I might consider going into Tuesday's trade would be the emerging markets ETF. If we really get a thorough trade deal, I would love to be long this ETF because it has so many big players who want to load up on this, including Ray Dalio. Besides the SPY, the emerging market ETF is his second largest position. Same for Druckenmiller, same for Jeffrey Gundlach. There's a ton of people who want to load up on this ETF, but not until the coast is really clear. So that's a review of our current outlook. Now I do want to point out for those of you listening, if you go to the description box, we have a special Friday only sale. One is to save $2,000 a year on our advisory today only. So just go to the description box. You can click this and get the special deal. Also, we have a new offer where you can get the boot camp and advisory for monthly payments, bi-monthly payments of $997. So that's a huge saving. It's 16 payments. You get both products for lifetime. And if you think about it, this will pay for itself. This is daily on-the-go income trade alerts targeting a 1% return with only one losing month of -1% and an average of 1.7. For every $100,000 invested, our goal is to generate a profit of $100,000 a month. Income and safety, not growth or speculation. Our simple 4 ETF portfolio is extremely diversified and all you'll need for retirement income. It's time to simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. My promise to you is I will protect your assets and show you how to pick the low-hanging fruit. Our put options hanging right below the SPY and TLT ETF make it impossible to lose very much money, period. And remember, for every $50,000 you deposit to your broker, you'll have $100,000 of buying power. If you build this portfolio right here and join either of those offers in the description box below, you should be able to finance the entire cost of our product for free just from trading. Now, of course, profits are not guaranteed. Future results are not something we can guarantee in any way, shape, or form. But what we can do is look at our past results to give you a feel for what our best months have looked like and our worst months have looked like. And then you can take a look at your portfolio and compare it. Are you getting better results or worse results, and with how much risk? So the best setup to follow our program is 100 shares of the SPY on Monday, Wednesday, Friday, noon Eastern. We come out with a trade. Currently, silver is our Tuesday play with 600 shares. That's optional. TLT, if you are playing the Tuesday trade, should have 300 shares at $45,000 investment, and then a buy and hold position in GDX with 333 shares. This gives you essentially the same risk profile I currently have. Now, if you want to have a little less capital to put to work and less work, try this setup. It's a 2-to-1 ratio of TLT to SPY plus 200 shares of GDX. And you can ramp this up. If you have $120,000, just double all these figures. If you have $180,000, triple these numbers. You get the point. Just multiply it by any multiple and you can scale up your portfolio. And if you want some super high returns with extra volatility, this is the highest returning setup we have. It takes the least capital to get started and still achieves a very similar result. So you have 3 options to follow the program. If you have any questions, call Dean at 505-322-7515 so we can get you started right away. And again, the special links that we're only offering today are right here in the description box. One will give you a $2,000 a year discount on our advisory program. That's that first link. The second link will give you our boot camp and our advisory for life with 16 payments spread out over the course of 32 months. So it's $997 split up every 60 days. So you can really easily finance the whole program and get the full product. Now let me show you what's in our boot camp. This is starting in November, so we're starting to get quite a few people to join. And with that new financing plan, I'm hoping we'll get a lot of people to join. Because this boot camp's not just about how to trade options. It's about how to understand our strategy in great detail. So week 1 is the big picture. Understanding the relationship between the bond market and the equity market, and how inflation is the single most important indicator to pay attention to and profit from by either being long or short precious metals at the same time. Week 2, we're going to talk about how to place the trades. And it was going to be interactive brokers, but since we were designing the course, all of the big brokers have come out with free commissions. So we may actually switch this over to Ameritrade. Stay tuned on that. Either way, week 2, no matter which broker you're at, we're going to make sure you understand in great detail how to execute the trades and what the risks are relative to these trades. Week 3 and 4 is more like being in tennis class. You can't just watch the coach serve the ball and expect to be able to do it yourself. This 2 weeks of boot camp is going to be you serving the ball. Lots of practice, lots of execution, lots of live quizzing. If you missed the content, you can still do it from home afterwards because the webinars are recorded. Week 5 and 6, we're going to move over to put options, how we use them in our portfolio, in the money, out of the money, at the money, everything you need to know about put options, selling them and buying them. Week 7 and 8, we're going to talk about option callers. So let's combine all the stuff we've learned into one strategy. And that's what we're actually giving you in the trade alerts. So tight option callers for a flat move, loose option callers for an upward move, and then upside down option callers for a down move. You need to know all three to be able to profit for the rest of your life with a stock bond strategy with SPY and TLT as your core positions. Module 9, we're going to teach you how to get your hands on crypto. We have a small 1% position in Bitcoin and a small 1% position in Ethereum. And the best way to do that is going to be with a little phone app, not with Coinbase or Binance, which require a whole lot of security and setup time. Weeks 10, 11, and 12, we're going to teach you how to build your own spreadsheet. So you'll get a copy of this template so that you can build your own spreadsheet exactly like mine. The same tabs, the same monthly breakdown. You'll be trading just like a professional hedge fund trader. Week 13, we're going to talk about a financial crisis. What are some extra ETFs we can put in our buy and hold portfolio to help profit from a downturn? And which market's going to pop first, stocks or bonds? Depends on what's happening. What should you buy after a financial crisis? Is the SPY the best bet, or are there some other ETFs you can put together for a slightly better return? We're a little ways off of that, but it is important to know that there are some alternatives to the SPY and the TLT that would make a lot of sense at the beginning of a cycle after a massive reset. Right now, we're in the middle of a huge debt bubble, so we want to have the best assets that can be closely protected with our put options below. That's why we're in the SPY and the TLT until this whole bubble, this whole house of cards comes tumbling down. Meanwhile, to wrap it up, 15th and 16th weeks, we're going to do advanced options. This is nothing crazy. We're not doing iron condors or calendars or butterflies. We're going to teach you some basic credit and debit spreads and when it would make sense to write a put option. So again, this program is all about mastering income trading for our specific advisory and teaching you everything you need to know to do this completely on your own, to feel very confident that you can get the same results we are, and also understand how the trades work. And so I'll just close up today by taking a look at our returns so you get a feel for how well this strategy does work. One losing month so far, July, negative 1%. October is going a little slow, but hey, we didn't know Trump was going to succumb to China. And so that did make quite a sell-off in the TLT. Not a big deal. We made up for the loss in the TLT with our SPY shares, and I suspect we're going to make a lot of money on the SPY for the next several weeks if this is the case. Now, if the trade deal breaks down, we've locked in those profits on the SPY today. We've moved up our put option much higher, and our TLT is set to generate a big profit if there's any negative news coming out this evening. September was a little slow, 0.3%. August, 1.8%. June was a huge gainer, 3.2%. May, the S&P 500 was down 5%. So if you had a big loss in May because you're all in on equities, maybe think about what our strategy does. We made a 2.2% return even when the market turned down. April, March, February, and January, anywhere from 1.2 to as high as 2.7% a month. And then in December, what did your portfolio do? Did you lose 15%? We made 1.2. So it just shows you how strong this ratio of the SPY to the TLT is in terms of reducing losses generating that consistent return and achieving our target goal of 1% a month with very little risk. So that's a wrap for today's content. A little bit shorter today. I'm going to be studying what's happening with this trade deal intensely and optimizing our portfolio. I do want to remind you, if you go to the description box, this is today only for that $2,000 a year discount, and we'll be promoting the advisory bootcamp combo heavily because we really want to fill our bootcamp up starting in November. So thanks so much. Let's see if we have any questions out there. Ernest, how's it going? Snowing in the mountains? Yeah, it's a little colder in my garage today, that's for sure. And Dean's heading to Durango, so that'll be nice and chilly, I'm sure. Any questions about our trades? All right, gentlemen. Well, a little bit shorter presentation today than normal. I do want to be heavily watching all the news flow on this trade deal. We'll see what the language looks like. I'm expecting it to come out after the market closes. Probably it'll just be the framework for a deal, and then I believe sometime in November, Trump and Xi may have a meeting scheduled where they could sign something. So we'll see if this all really happens. It's not the first time we've been supposedly close to a deal, so I'm skeptical. But as you know, we remained bullish on the trade alert with the SPY, so we did catch a pretty good gain today. We didn't get that full $9 pop, but we got most of it. And more importantly, if things had gone sour, we were completely protected. So once again, much more concerned about reducing risk and not losing money versus trying to be greedy and capture every little potential gain that's out there. So the strategy is working perfectly for that goal, and I look forward to a new Trade Alert Monday. Thanks again.